Hey folks, welcome to Pro Trader Strategies. We are an education company, so if you want an edge, it starts with education right here. So hit that subscribe button over there on the side. There's also a little bell there if you want to get notifications when I'm popping on here. We have some scheduled times here in the morning that I do it, and my webinars are scheduled as well. But during earnings season, if I find something or even just a trade late in the afternoon, I'll be jumping on here to let you guys know what I'm doing to keep you guys up to date and apprised. I used to throw that stuff out onto Twitter, but I think I'm going to be doing those live for you from now on. All right, let's get on with the economic data. We got stuff going on across the pond. We got French consumer spending coming in a little bit lower than expected there, but their flash GDP increasing a little bit. We've seen this GDP numbers coming in everywhere higher than expected, and that's not really surprising, seeing that we are seeing prices basically across the board go higher. I mean, we've talked about it from everything from lumber, copper, to even coffee, right? So prices moving higher, even crude oil that we can see there on the charts when we pull that up, that crude oil continues to move higher. That's going to increase prices as well. Germany, though, preliminary GDP coming in slightly lower than expected at 1.5%. Not really sure why that number would come in lower. European CPI, Consumer Price Index, slightly upticking to 2.2%. And the flash estimate for the year over year is 0.7%. Now, moving back over here to the United States, we got our personal consumption expenditures. Now, personal consumption expenditure is individuals like you and me. We're not a company, because a company could still be considered a consumer of products. Okay, so that's why consumer price index is a little bit different. This personal consumption expenditures is how price increases or decreases in prices is affecting that individual. It actually came off a little bit to 0.4%, expected to be 0.6%. Spending, though, coming in at 1%, expected to be 0.7%. So people out there spending, and we saw a nice big spike here in personal income coming in at 0.1%. It was supposed to be a negative 0.4%. And if you guys remember last month's number, that number was one of the lowest readings we've seen in probably 20 years when it came in at that negative, what was it? It was negative 2% or something like that. So that is good to see that that's starting to turn around there. Chicago PMI, Purchasing Managers Index, forward looking. Remember 2 months ago, we got a 75 reading. That was the highest reading we've seen in 40 years. Well, this one comes in at 73.4. It was expected to be 64.2. So 10 percentage points higher, almost 9 really. But that is a huge beat on the street there. So Chicago PMI, Purchasing Managers Index, they are forward looking because they are seeing the demand come into the company. Well, that's a good thing. That should be a little bit bullish here. University of Michigan Consumer Sentiment coming in higher than expected at 81.2 there, folks. So, hey, hello. How you doing out there? Alibaba. Alibaba's in the house. Shipping costs coming out of Alibaba are through the roof as well, folks. What used to, for a small shipment box, say for samples coming out of Alibaba, it was about $60. So now for a box, that's basically a 2 foot by 2 foot, $150. So keep that in mind. Those are prices that are increases. Those are some of those transitory because of the shipping demand that's going on. No cargo. You've heard me. There's no cargo containers out there, so it's very difficult to find, and then that means there's limited supply of those. Demand is huge. Price of shipping going through the roof right now. All right, let's share the screen here and get on with the overall markets. I believe I'm sharing. Everybody can see that, right? Let me make sure. It's not really showing up on my thing here. Share the screen, folks. There we go. All right, we're sharing. So if you guys want, click over there on the side. Make sure you guys are commenting because I want to make sure you're clear of concept before we start moving along. All right. We've got crude oil moving higher here a little bit today. I'm saying this is looking very toppy here. We've got this doji. It's at the top of this move. It's not a major move here, but I just think that crude oil is way overdone to the upside here at 75-ish area. I'm expecting this to roll back down into the 60s here next week. So I think we're going to continue to see some lack of demand coming out of some of the manufacturing sector. We're seeing a lot of these companies during the earnings. We're basically halfway through the earnings, folks, And most of these companies are coming out with pretty good earnings, but their forward guidance is crummy. We just heard it from Amazon today, basically year-over-year comps from the pandemic. We can imagine that these stay-at-home stocks are probably not going to do as well right now as they did during the pandemic. So stuff like Amazon coming back off, saying that basically the year-over-year comps are lower than expected, but we saw huge adoption. They are also saying that they are doing well with the advertising, but forward guidance on adoption was pretty crummy, and that really was the catalyst that sent Amazon tumbling today. Let's get on with the rest of the markets, though. Bonds starting to move a little bit higher. We got equities in negative territory. There's a bit of a flight to safety there. You can see that. Sorry, that was, I believe, Bitcoin. I just blew through on accident there. Bitcoin just slightly off on the day. You guys have heard the headwinds I've talked about with Bitcoin. It's going to struggle here for a little bit. Finally seeing a little bit of pullback here in gold. I don't want to see it move outside of that 18 handle. I think that moving up into that 18 handle is kind of where the sweet spot is for this, with the inflation fears being transitory or not transitory. That is going to be something where people are flying to gold to be an inflationary hedge there. All right, we've got VIX moving back a little bit higher today as equities are in negative territory. You can see the Dow or the NASDAQ down over 100 points. Dow Jones Industrial Average down over 100 points as well. E-mini S&Ps probably holding on a little bit here, well off their lows of the day. As you can see, most of the broader markets are well off the lows of the day, but still seeing some weakness here in the E-mini S&Ps, off by about 25 points. You can see off the better parts of the lows and the highs of the day. Morning rally off of the economic data. We're just seeing a little bit of weakness here heading into the day. That's not unheard of here, folks, in summer markets. Summer markets, what we have a tendency to see is the institutional money dries up in the afternoon, basically in the next half an hour or so. And then basically the retailers are the ones that in there playing around, whether it's the swing traders, just traders, or the retail investors coming in and playing around. That usually is going to be the driving force, and that is usually more negative. So I would say that the risk is to the downside, despite the fact that we've had some pretty decent economic data today. I do think that we're going to see a little bit of a hangover here, just based on some of these markets, like Amazon dropping here. As you can see, at one point in time was down a little bit, right around 10% on the open, or after the open, I should say. We're coming off that low here, making it look like a little bit of a bottom here. Now, I was looking at a couple of opportunities here, maybe buying some calls. You got the low volatility. I don't know that the volatility has completely come out of this yet, so I'm going to hold off just a little bit, but I'm looking for Amazon for a bullish move. I think that this is overdone to the downside. It was just basically because they just gave crummy forward guidance, and year-over-year comps were worse than expected, which I cannot believe nobody really was expecting that their year-over-year comps was worse. But I'm looking to play this to the upside. Very nice chart setup like that. I love it when it gaps down, especially on Monday. We get a green arrow ending above today's wick here. Basically, that would be a confirmation that we have bottomed, and it's going to try and cover that gap there. I'm looking for my pen here. Let's throw this thing over here so I can screenshot this or screen snap it. But basically, what we would need to look for, if this doji stayed the same, we would look for a candle that was green to finish somewhere above basically this line in the sand. So we're kind of looking at right above that value area high there. That's going to line up with, somewhere around 3,364. So that would be what I would look for a confirmation on this type of trade and a bullish move to follow there. I'm going to be looking at trying to add some calls on that, because low volatility, maybe a call spread, but low volatility, I want to be looking to buy an option. Now, I could do something like a synthetic long or something like that, but I'm going to probably go with a little bit less risk in this trade and do a long call or a long call spread there. Let me know what you guys would do in something like this. You guys want to play Amazon to the upside after this earnings, or would you guys play it to the downside? Throw it over there in the comments. I'd love to hear from you guys. Or if you guys want me to look at any other charts that I already don't have up here, be happy to go over that. And then Las Vegas Sands, very similar what we're looking for here at the bottom here. We've got a spinning top doji at the bottom. That is usually a signal of a bottom as the buyers start coming in and supporting this. And you can see the entire reopen trade has not done very well, but I've talked about this. As a matter of fact, I'm getting a little overweight in the casino section or the reopen trade, but really the casinos have just been really beaten up. And from what I'm hearing, I'm relatively close to Vegas. People are not stopping their trips to Vegas. There's a lot of folks going there. They might not be flying, but they're people driving 5, 6, 7 hours to get to Vegas rather than taking an airplane. So if you're looking at flights into Vegas as an indicator as to the health of that economy, I think you're mistaken. I think it's really going to be their occupancy rates, and they've been doing very well on those occupancy rates. So in this regard, I would look for a confirmation if you are less risk tolerant. I'm jumping on board right here at the bottom of this move before the confirmation. So I'm getting involved in Las Vegas Sands to the upside here. And I did this both in my IRA and in my trading account, and went in, just bought the calls out in the October, bought the 45 calls in there for $2.37. Like I said, I'm usually a little bit early on these trades, but if you would get in early here, then you would want to be out below this low here on Monday, right? Okay, if it goes below that and settles below that, I should say a settlement below that low of 42, all right? Settlement below 42, out of this trade. Confirmation for newer traders, look for a candle to kind of move higher. Just want the settlement to be above this line there. Okay, so on Monday or something like that, that would be a look for a confirmation of a bullish move there. Obviously, this was a bottom of a move here, right? That would have looked like a bottom, but then no confirmation. Okay, so that's why if you have a lower risk tolerance, then you should wait on something like that confirmation, because it doesn't always work out, obviously. Confirmations don't always end up being perfect either, but they are definitely a better indicator than just going in on one of these setup dojis is what we look for. So I played this to the upside, both IRA and in my trading account. And that's about it. I didn't play Amazon or any other of the earnings. Caterpillar, I think, came out with earnings as well. They did move a little bit to the downside, but for the most part, they're right there at the 200-day simple moving average. I'm not going to get involved in this. Again, forward guidance is a little bit big. And that's about it, folks. So everybody have a great weekend. Don't forget to subscribe and hit that bell so that when I pop on here, if you guys want to hear about trades that I'm doing, when, where, and why, I talk about those aspects of it, and how we can try to turn the tables of probabilities in our favor using options by implementing them at the right time with the right levers and pulleys working in our favor. All right, so comment. I'll circle back around, folks, if you guys have any questions, comments, or anything else over there. And finally, smash that like button for us. It does help us out. If you can't take that, take it easy. Bye for now.